London's housing bull market continues to gallop along at an astonishing pace, which, depending on which measure one looks at, ranges from an annual rate of between 8% and 12%, and that the most recent surge higher has now lifted the average London house price to over an eye-watering 600k, pushing London house prices affordability ratios well above times 10 average London earnings, pushing London properties out of the reach of even the professional middle classes, let alone the army of working class necessary to keep the metropolis ticking over, where many prospective home buyers are being forced to adopt extreme measures such as shared ownerships, or be convinced by highly polished sales pitches that a tiny box studio flats priced at 300k plus in a rundown area sold as up and coming are a very good deal. So buy now before it is snapped up by someone else, probably who has yet to even set foot in Britain, which highlights London's ultimate safe haven status, not just for the world's people, but also capital of tax evading billionaires and people of more ordinary means, ploughing their billions into London's better than gold property market each year. London's population has soared over the past 35 years from 6.6 million in 1981 to 8.7 million today, an increase of 2.1 million. However, this masks a far greater change than the headline figure suggests, as London has literally been transformed from a mostly white British city to a multi-layered, multicultural city, where the population density graph now masks the reality of London now being several cities overlaid upon one another, which, whilst all being influenced by capital flows out of the central London global money markets, nevertheless will have their own house prices bull market driving epicenters. Some 50 years ago, London was a city divided between affluent and deprived areas such as the East and West Ends, exhibiting great differences in house prices. However, vast migration flows of the past 2 decades have increasingly resulted in a multi-layered city, far more so than any other UK city, which is as a consequence of London being perceived as the world's ultimate safe haven, and thus is the first port of call for most migrants, that usually becomes their permanent home due to existing built-up ethnic population densities. And breakdown by religion further results in population concentrations and house price demand epicenters. Given these maps, it should not come as much surprise to know that today near 50% of London's population comprises ethnic minorities, most of whom, i.e. 90%, are foreign born. That's right, 45% of London's population is foreign born, more so than any other major city on earth, which illustrates the magnitude of immigration that has been underway and is one of the primary contributory factors for driving up London's house prices into the stratosphere, whilst at the same time displacing the white British population, as whilst London has added 2.2 million people, nevertheless the white British population has shrunk by over 1 million during the past 20 years alone, which illustrates that London is fast trending towards comprising distinctly separate ethnic and religious enclaves, including non-British white enclaves originating from Eastern Europe. This means that London has multiple epicenters for driving London's housing bull market that are centered around high density of ethnic and religious populations that act to funnel capital into the London housing market, as immigration drives further immigration of not just people but also capital from foreigners aware of the existing large communities of their own ethnicity in London, the world's ultimate safe haven. For instance, in recent years, London has witnessed huge amounts of capital fleeing totalitarian states such as Russia, China and the Gulf states, into London's property market, into areas inhabited by people of their own ethnicity, as a safe home for their capital and eventually themselves to permanently escape to. So it's not just the world's dubious billionaires or oligarchs who have been flooding London with their wealth for safety from corrupt regimes, but also many millions of individual people seeking to protect their wealth from their governments, who see London property as a safe haven, which thus contributes to driving London house prices into the stratosphere, as they are, for instance, convinced by the slick sales pitches to buy tiny flats off plan in rundown areas sold as up and coming at ridiculous prices, under the illusion that not only is their wealth safe in London, but also will appreciate by 10, 15, even 20% per year. It's just not going to happen. Thus, London, like a black hole, is continuously sucking in people and capital from across the world, the rate of which tends to increase each year regardless of politician rhetoric. Thus, ever-increasing demand from the ever-increasing populations that are continuously displacing the white British population, revolving around cultural epicentres, as London in reality is becoming many very distinct cities, so does not exhibit the pattern for house prices that tends to occur in virtually every other UK major city, where there tends to be clear demarcation lines between affluent and deprived areas. Instead, London is a patchwork of dozens of dispersed affluent areas that themselves revolve around the central London property market. Britain's unrelenting immigration crisis just keeps getting worse with each ONS data release, as the latest record-busting net migration figure of 336k in the year to June 2015 illustrates an increase in the rate of migration of 32% on 2014, which literally translates into a daily flood of near 1,000 people turning upon Britain's shores and demanding housing, education, school places, jobs with benefits such as tax credits, health and social services that are buckling and breaking and ultimately freezing, as the social housing in many cities already for several years has, in the wake of a 15-year-long trend of out-of-control immigration, for which London has always been Britain's immigration epicentre, as the earlier maps clearly illustrated. A key point that the mainstream press has apparently missed is that the net figures mask the reality of what the gross immigration figure of 636k implies, which effectively means that the impact of immigration is double to that which the headline figure of 336k suggests, i.e. in terms of social cohesion and housing and services for the pockets of the UK most affected by immigration, namely London, the South East and other inner cities. Immigration is also one of the driving forces for the buy-to-let sector, as foreign-born populations are 3 times more likely to rent than UK-born, which in large part is due to the benefit system, i.e. migrants' greater propensity to claim housing benefit. Britain, Europe are not just dealing with the likes of the Syrian civil war that produced over 4 million refugees. Most of them were determined to find their way to the likes of Germany and Britain, but also the fact that Africa continues to undergo a population explosion, where the continent's population looks set to double once more over the next 30 years from 1.1 billion to 2.2 billion, that will result in a migration exodus that will be exponentially greater than that which is taking place today, which implies a trend for ever-increasing number of economic migrants from Africa alone, let alone the continuing increasing flows from the more prosperous Asia, i.e. China, and elsewhere, who can afford to pay people smugglers for transportation to a new life in the UK, as I have covered in depth in this video analysis. Therefore, Whilst today the mainstream broadcast press crisis coverage of immigration is focused on the camps of tens of thousands of migrants on Europe's southern borders and even some 5,000 near the port of Calais. However, Britain should prepare itself for what the trend implies looks inevitable, that within the next few years already buckling and highly stressed state services will break under the weight of numbers, in response to which the government will be forced to introduce unprecedented measures such as cordoning off pockets of southern England into self-contained migrant camps of first in the tens of thousands and ultimately numbering in the hundreds of thousands, in an attempt to contain the consequences of the immigration catastrophe that is implied as the consequence of 10 million immigrants entering the UK, net 5 million over the next 10 years. That will be in addition to natural population growth of approximately 4 million. In fact, 10 years from now, the UK will likely have whole villages and even towns cordoned off as permanent migrant camps in an attempt to contain the catastrophe. And looking into the not too distant future, London's increasingly rigid ethnic and religious enclaves are sowing the seeds for the probable breakdown of social cohesion, as increasingly people will virtually live their whole lives without venturing out of their ethnic and religious enclaves, apart from the occasional sightseeing trips to central London. This will throw up a whole host of potential consequences over the coming decades due to the risks of a myriad of ancient conflicts being imported and played out on London streets, such as the civil war between Sunni and Shia Islam. What happens when large enclaves start to demand self-determination, even declaring themselves independent so as to detach themselves from what they see as alien and subversive cultures? Can't happen. Think again. All it would take is population concentrations to start to exceed 75% density for such crises to start to become manifest. London is not there yet, but it's the direction in which it is fast trending. When population density reaches critical levels of 85 to 90%, that start to trigger calls for self-determination, own systems of education and law, and ultimately some form of separation from the British state that would undoubtedly be highly disruptive for the future prospects for London house prices. The bottom line is that it is pointless for the likes of George Osborne to announce plans to build 400,000 affordable homes over the next 5 years, because it does not matter how many new homes are built. 400k, 500k, even a million will make no difference to Britain's housing crisis, for the simple fact that Britain has an immigration crisis. As continuing out of control immigration ensures, new demand will always far outstrip new supply, with the epicenter for the immigration crisis being made manifest in London, which whilst has been good for house prices so far, nevertheless, as my earlier analysis highlighted, is in fact trending towards future crises due to there being no plan or objective to assimilate migrant populations. Instead, the exact opposite is occurring in the formation of high population density enclaves that sow the seeds for self-determination Kosovo style. Average UK house prices have now risen by 30% from the 2009 bear market low to currently stand at an average price of 204k according to the Halifax, and are currently galloping along at an annual inflation rate of 10%. However, the UK average price masks huge regional variations in trend and momentum, most notable of which is that London has literally soared into the stratosphere, up over 70% from its bear market low, and by virtue of which has pulled the average UK house price indices higher, as illustrated by these graphs. The most obvious pattern being observed is that the nearer a region is to London, then the greater the house price inflation experienced. Therefore, London is acting as the bull market's epicenter that is rippling out waves of capital which are mostly absorbed by the southeast region, then the next nearest regions, all the way to Britain's most furthest region, Scotland, which was not helped by Scotland's attempted suicide that was the 2014 independence referendum, which held Scotland's housing market back until after the election outcome was known. For further in-depth analysis of the regional house prices, see my recent video analysis. To get an angle on whether London is in a property bubble or not, I again refer to the comparison between London and the rest of the UK, as this graph shows the percentage deviation in average London house prices from the UK average of the past 30 years. The current deviation from the UK average of 202%, i.e. 100% premium, is at a new 30-year extreme. Previous deviation extremes junctured at plus 180% and plus 190%, therefore 202% is at a probable juncture for London house prices. However, a deviation juncture does not mean that the London house prices area are about to fall, as during the last bull market, London house prices continued to rise for another 5 years after the deviation juncture, as the rest of the UK played catch up. Therefore, London is extremely overbought, but this does not mean that falling London house prices, yet a crash is imminent. Rather, that it appears that London is imminently about to pass the housing bull market baton to the rest of the UK. Therefore, this suggests that London is going to experience a significant slowdown in average house price inflation, and even falls for some locations, whilst the rest of the UK will see an acceleration in house price inflation, which is supportive of my long-standing house prices forecast expectations for the bull market to continue for another 3 years. Therefore, in conclusion, my UK house prices forecast is for the Halifax non-seasonally adjusted house prices index to target a trend to an average price of £270,600 by the end of 2018, which represents a 55% price rise on the most recent Halifax prices data of £174,671 for November. Again, note that this analysis in this video is merely an excerpt from the total analysis in arriving at this trend forecast, so do refer to my UK housing market ebook, which will be available for free download from the middle of January 2014. And briefly, a reminder that changes in stamp duty tax will be a significant hit to London's housing market over the coming years, and even more so for the buy-to-let brigade, who will now pay an additional 3% surcharge when buying properties. Though ironically, this should result in a temporary surge in house prices over the next few months, especially at the lower end of the market, which will be set against those buy-to-let landlords who have had enough and decide to sell their portfolios into temporary strength before the next negative measure is announced. What was supposed to be once in a century floods are now occurring every 5 years or so, as the north of England has been witnessing this December, as the consequences of climate change that are starting to make real extreme weather effects become manifest, with costly consequences for homeowners, and not just in terms of costly repair bills and replacement of flood damaged goods and items, but the negative hit on house prices right across the UK, as the escalating future consequences of climate change will increasingly be factored into home buying decisions. The once in a century floods of less than 2 years ago across the south of England, as a series of jet stream driven storms dumped huge amounts of water over most of southern England every 2 to 3 days, far beyond the capacity of river systems to cope with, that were continuously overflowing onto already saturated land, resulting in ever escalating flood alert warnings as illustrated by this map. The floods illustrated that whilst London can continue to build ever greater flood barriers to defend itself from rising sea levels, what it can't guard against is the increasing frequency of ever greater amounts of Thames River busting rainfall that will increasingly occur at least once a decade. Many scientists use the term global warming to describe what is taking place with our climate, as melting of the sea ice at the north and south poles affects atmospheric air current circulations, such as the diversion of the jet stream, resulting in the ongoing series of extreme weather events where this year and early 2014 it was heavy rainfall, and for the year before it was extreme cold and snowfall. Whilst prospective home buyers can change many aspects of their properties after purchase, however, one thing they cannot change is the geography of the location, so it is of the utmost importance that home buyers seek to mitigate the risk of flooding as a consequence of climate change by following a few simple rules in their property selection process, so as to prevent making a disastrous decision resulting in buying a property that may be unable to be resold at a later date. So in my opinion, home buyers should at a minimum not buy properties of less than 30 meters above sea level and 10 meters in elevation from the valley floor or height of the normal river, even though this would remove many properties out of the potential target locations. It will extend to far beyond the Environment Agency's own current flood maps that tend to only cover 2 to 4 meters above the normal height of nearby rivers such as the Thames as recognized floodplains. Pulling all of the threads together paints a rather bleak picture for the future prospects for London house price inflation, as it looks like we are witnessing the peak of the London property bubble mania, at least in terms of deviation from the UK average. But this does not mean that there will be across the board price falls, let alone a crash. Rather that London will increasingly underperform the other UK regions over the coming years, as it steadily loses its 100% premium to the UK average that could easily be whittled down to plus 50% of the next few years. In terms of house price inflation, expect 2016, 2017 and 2018 to average under 5%, which compares against this year's 10%. In fact, London over the next 3 years will probably turn out to be Britain's worst performing region. However, the sub 5% average masks what will happen across London's property epicentres. What will probably happen is that the most expensive, most affluent properties will take the hardest hit and probably see significant price falls, whilst the lower end of the market, in terms of location rather than the property type, will do much better and so exceed the 5% average. And looking further ahead, we may also be witnessing a long-term juncture for London, which, whilst it will continue to retain a premium over the rest of the UK, nevertheless, this bull market may mark the end of the future bull market extremes of reaching anywhere near today's 100% premium to the UK average. So in my opinion, London is no longer the best place for long-term UK property investing, which means a lot of property investors who have ploughed headlong into the London mania over the past few years are going to get very badly burnt, especially those who have bought flats, which are likely to be by far the worst performing property type, that they are likely to suffer heavy price falls, which is why I've repeatedly warned to avoid buying flats for several years. My next in-depth analysis will seek to conclude in a detailed trend forecast for US house prices for several more years beyond my existing forecast from October 2012 to early 2016, so ensure you're subscribed to this YouTube channel.